Fred Hubler, CEO of Creative Capital Wealth Management Group. I got asked the other day, what are some examples of alternative investments? And at a very broad, a broad view of it, there's going to be alternative investments that are going to do either private debt or private equity. So private companies, bonds, and or private company stocks. And those are typically private equity firms that are buying that and redoing the business and hopefully returning a greater return to their investors by fixing up a business and selling it. There's a bunch of real estate that is in different ways alternative investments. You can get into real estate using a 1031 and a DST. You can get into real estate using a Reg D, which is a short-lived strategy or short-lived investment that raises money and then does something with it, and eventually 3 to 5 years later returns the money to the investors with hopefully a gain. So there's a lot with real estate. There's obviously a lot in business. So there's alternative investments that buy franchises and then add money to the franchise to make them look nicer, and then increase the return on those franchises and then sell them. So a lot of aggregate plays, and the biggest thing right now as we get to the end of the year is taxes. So there are alternative investments that either help reduce your taxable income and therefore your taxes, or help you absorb some capital gains from a capital gain event and have the ability to defer those gains. And if you use an Opzone, you can also put money into an Opzone that's a capital gain. And then when the Opzone's sold down the road, usually 10 years in a day for the investor to get that money back, that money is also tax-free. So there's a lot of tax plays in the credit investment space. There's more every day, but they're the basics.